Welcome to The Explainer. Today, we are getting right into a massive tax change that affects South Africans who are working overseas. Believe me, this one has some really big implications for your income, no matter where in the world you earn it. So, let's just cut to the chase. Are you a South African citizen? Are you earning money in another country? If the answer is yes, then you need to listen up, because this explainer is 100% for you. We're going to cover what changed, who it hits, and what you really ought to be doing about it. Okay, look at this number. 1.25 million rand. Burn this number into your memory. It is, without a doubt, the single most important part of this new tax law that kicked in back in March 2020. Everything kind of revolves around this figure now.
So here's the deal. That old system, the one where you could potentially exempt all of your foreign income from South African tax, well, that's gone. It's been replaced with this R1.25 million rand tax-free limit. If you earn more than that while you're working abroad, SARS could be taxing you on the rest.
All right, so you're probably thinking, okay, but does this even apply to me? And that is the million-dollar question, isn't it? The answer, well, it all comes down to something called your tax residency status and how the South African Revenue Service, that's SARS, sees you. So SARS has two main ways of figuring this out. First, there's the physical presence test. That one's pretty straightforward. It's just a numbers game. It's all about how many days you've been in and out of the country. But the second one, the ordinarily resident test, that's where things get a bit more fuzzy. It's not about dates on a calendar. It's about where your life is really centered. And for most expats, this is the test that truly counts.
See, with the ordinarily resident test, it's not about just one thing. SARS is basically putting together a puzzle of your life. They look at a whole bunch of factors, things like where your family is, where your main home is, your business connections, your social life, and maybe the most important piece, what your long-term intentions are.
In fact, a famous court case really nailed the idea perfectly. The judge said a person's ordinary residence is the country they would naturally and as a matter of course return to from his wanderings. So ask yourself that. When your time abroad is done, where do you see yourself coming back to? If the answer is South Africa, then chances are SARS sees you as ordinarily resident. Okay, I know what you're thinking now. Hang on. What if I'm already paying tax in the country where I work? Surely I don't get taxed twice. And that is a great question. This is exactly where something called a double taxation agreement, or a DTA, comes into the picture. Now, this is a huge, huge misunderstanding for a lot of people. A double taxation agreement does not mean you're automatically exempt from South African tax. No way. What it means is that SARS will give you a credit for the tax you've already paid in another country. So, for example, if you're in the UK, where taxes are high, you probably won't owe anything extra to SARS. But if you're in a low-tax place like Hong Kong, you'll owe SARS the difference. And if you're in a zero-tax country like the UAE, well, then you could be liable for the full South African tax on everything you earn over that R1.25 million mark. So what happens if you decide that your wanderings are actually permanent? You've decided to build your life elsewhere and you don't plan on returning to South Africa to live. In that case, you can't just disappear. You have to go through a formal process to officially end your tax residency. This process involves something called the exit tax. And yeah, it sounds pretty intimidating, I get it, but really it's just a capital gains event. The day before you officially cease to be a resident, SARS considers you to have sold all of your worldwide assets. Now, this excludes your fixed property in South Africa, but everything else is considered sold at its market value, and that sale can trigger a capital gains tax bill that you'll need to settle up. So, as you've probably figured out by now, trying to manage all of this is, well, it's complicated. It requires some really careful, proactive planning, because getting this wrong isn't just a small mistake. It can lead to some seriously significant penalties and interest from SARS. It's not something you want to mess up. And look, every single piece of expert analysis on this subject says the same thing. Do not try to navigate this stuff on your own. This isn't a DIY project. It's a really complex part of tax law with some pretty high stakes. Getting personalized professional advice isn't just a good idea. It's absolutely essential. And when you do go looking for that guidance, it really pays to find a specialist who lives and breathes the expat world. It's a unique situation.
In fact, some advisors are now pioneering completely new ways to help overseas investors handle this exact challenge.
One of those specialists is a guy named Adrian Rolls. He's actually based in Dubai, which, as you know, is a massive hub for South African expats. And he's bringing a really interesting tech-forward approach to the table. He's pioneering the use of AI and financial advisory and has a whole global team of experts backing him up. It gives him this really unique vantage point on how to balance the risks and rewards for people just like you.
Best of all, he actually offers complimentary online consultations so you can just talk through your specific situation. Again, that name is Adrian Rolls, that's spelled Rowles. You can find him easily on Google or LinkedIn, or you can book a chat with him directly at calendly.com/Adrian Rolls. So let's leave you with this one final crucial thought. Your global tax life is complex. There's no doubt about it. Knowing these rules is a great first step, and well done for getting this far. But what really, truly matters is taking action. So the question is, have you taken the right steps to make sure you're compliant?